So as discussed, this panel discussion revolves around open banking APIs. We're going to touch about cross-border regulation, innovation-centric regulation, because I think we do have a point of view where regulation can help to make the balance between innovation and compliance for fintechs better. And we hope to touch upon compliance challenges for startups. My name is Rijneveld. I'm a partner at PwC in the Netherlands. Regulatory background, and on the basis always extremely interested in what regulators, policymakers should do differently to make an impact in the financial services industry. I'm joined by Graham Davies, joint CEO and co-founder of SendSpend. As a short introduction, Graham, a chartered accountant and entrepreneur, having previously founded 2 successful venture capital-backed startups, myhelpline.com in 2001 and NetSurfer in 2010. 2016, Graham started developing SendSpend, a global multi-currency payment system that enables online payments from mobile money wallets and instant cross-border money transfers between mobile wallets and bank accounts. SendSpend is an alternative payment system to traditional payment cards and SWIFT money transfer. And SendSpend has recently signed a money remittance contract with the MPCI for real-time money transfer from the UK to India, and plans to be live before the end of 2023. Next to that, we have Matt Komorowski, Chief Revenue Officer of Volt, which is building a global real-time payment platform, one of the fastest growing open banking companies in Europe. It's been recognized by Business Insider as one of the 54 fintech startups to watch. Prior to Volt, Matt spent 10 years at PayPal as a general manager for Northern and Central Europe and leading the partnership teams across APAC, LATAM and EMEA. Then we have with us Premier Oiwoh, and I was told that if I would mispronounce it outside of Africa, I wouldn't be in any trouble, so I'm hoping it was, it was okay. Managing Director and CEO of the Nigeria Interbank Settlement Systems PLC, a seasoned banking professional with over 3 decades of multifunctional and international experience in banking. He has deep knowledge and understanding of business process automation, digital financial services, payment systems, and operations, information technology sector of the Nigerian banking industry. And then we have Manu Rajan with us, Division CEO of Wing. Manu has over 25 years across a blend of advertising, analytics, telecom, customer finance and e-commerce and fintech background. He has worked with companies for markets like the US, Asia, Africa and the Pacific Islands. Manu is currently the Division CEO of Wing Cambodia, which is interested in commercial banking, payments and e-commerce. So I think with these I would say seasoned professionals, we would be in great company to have a dialogue on how to maintain a fine balance between innovation and compliance with fintech regulation, both from experience and a current point of view as being market practitioners. So we're going to dive into the first topic, gentlemen, which is around open banking APIs, trying to analyze how regulations mandating open access for certain financial data can spur innovation by encouraging collaboration. I think that was what the point was saying. I would say as an introduction, what I found interesting is that after the financial crisis, policymakers around the world started to focus on what I would call the never again regulation, financial stability, how to be that better, but at the backdrop of that also recognized that the system in itself needed to change. Needed to open up, more innovation, more customer protection, new players coming there, and comprehensive set of regulations was drafted across the globe. And I think perhaps on the first topic I would like to start with you, Matt, is open banking and open banking APIs have triggered entry of new fintech players. I think just I'm from Europe, looking at from a distance, looking at the globe, I would always say is that it hasn't always or everywhere delivered on its promise. If I look, for instance, at Europe, I think India has done really well. What would be your views on that?
I'd like to start by saying that I'm very excited to be here with all of you, and thanks for a great question. I mean, open banking to start with has, in my opinion, not only democratized financial services, but also has democratized our access to our own data that is being held by different financial institutions. So I think that's the movement towards that is a massive step that gives both consumers more access to their own data, but also gives them more options, making things more competitive, more accessible, and in effect, cheaper. There's about 70 different countries around the globe that have rolled out different forms of open banking. In India, it's UPI. In Brazil, it's Pix. In Europe, we call it open banking. But the way that it's been done varies quite significantly from country to country. Who the regulation is written by, how defined the regulation is, but also how the economics are defined in terms of how different participants within the open banking ecosystem are incentivized to make the system work or not work. And I think the way that it was written in Europe under PSD2 was a fantastic initiative, but had some flaws that I believe other countries learned from. Essentially, PSD2 was written that banks need to allow consumers to give access to licensed third parties to be able to access either payment information or account information, or to actually initiate a payment. Now, some of the problems are, first of all, there's no payment guarantee within PSD2. So if you initiate a payment, that payment is guaranteed once the funds settle, but that time between initiation and settlement is not actually guaranteed. There's no incentive for the banks to comply. There's no monetary incentive for them to make sure that the APIs actually work properly. And then third thing, in terms of moving from settlements that take 48 hours to settlements that are instant, again, there are mandates around this, but there's nothing actually incentivizing the banks to enable that sooner than later. If you look at, and again, that's also translated into slower adoption among banks, worse APIs, slower adoption amongst consumers and merchants, although we are seeing that pick up. A stat from the UK that came out the last few days, there's been 11 million transactions on open banking in the UK in July. If you look at 11 million in the context of India, it's pretty small. If you look at it in the context of the UK, it's actually quite significant, and that's growing every month, double digit. If we look at other countries that have rolled it out, that have actually had it properly mandated from the start in terms of exactly how it works, like India with UPI, like Brazil with Pix, you see adoption that within 2-3 years has gone, I believe in in Brazil it's around 60-70% adoption. In India, I probably will misstate this, but I've heard stats of anywhere from 30 to 50%. So if you have the stakeholders involved and the regulation defined and you limit the amount of ambiguity, you will drive much faster adoption.
Yeah, I think that's an interesting point, because I think with PSD3 coming out in Europe, I don't think that solves some of your concerns just raised, right? So I think that's, a great example of where you would see actually a policymaker not necessarily having it right, and should have done perhaps slightly different, or learn from what's going outside of that. I think perhaps with that, Manu, I think you had a great example of Cambodia where that was done slightly different. Perhaps your views on that?
Thank you, Thomas. First of all, excited to be here. Thank you for having me here. My name is Manu. I represent Wing, Cambodia. In our observation, I also have a good story to tell, but from a very different context and perspective. In our observation, I've noticed that there are 4 things that are very important, apart from, of course, the open minds that has to drive the open AI, open API. The first one, obviously, is the context. Now, what's the purpose of you driving this? What's your business model? And is the business model deep-rooted in that purpose? And the purpose varies from country to country. Now, when we started Wing in Cambodia, the formal bank accounts were just 9% of the country's population. And you definitely had a need to drive an exploratory, innovative approach towards regulating a new business model which was non-existent before. So we started as a mobile financial services company inspired by M-Pesa from Kenya. And we failed in the first 3 years. The company was started by ANZ Royal, and it had to be wound up because fundamentally because we approached the business just like how a bank would approach. So we went to the unbanked in the country and he said, here is this platform, that's beautiful, robust platform that we have built. Now you please come on board and bank yourselves. And they didn't. So we failed and the company was almost insolvent and had to be wound up. And that's when the current shareholder saw the potential in the business and bought it over. And the only business, and turned it around, the only change that they made is in our thinking and not in the market. So we said instead of making a customer do a digital transaction on their own, we changed and we said, you come to an agent, a human being, and over the counter you carry out a digital transaction which the agent will do on your behalf. And it's still a digital transaction. Everything has just got facilitated and all the decisions happened digitally. But you really didn't have to change the way you live your life. So the purpose changes. Now, if it is financial inclusion or removing friction from an existing payment system in your country, so the context changes and your business model has to be deep-rooted in that purpose. The second most important one is the trust. And that's where you need to have robust architecture. You need to make sure that the millions and billions of transactions that you're carrying out on your platform does reach the intended recipient without mistake. So that's something that you build over a period of time. And then we, at Wing in Cambodia, is one of the most trusted brands, not only in payments, but across categories. And the third observation is demographics. It is the comfort level of the people to adopt the platform that you have built. And then we have noticed that the elderly usually are not so comfortable doing a financial transaction digitally. But don't make no mistake, they're digitally included. They may have a social media account, they may have a smartphone, but they're not comfortable doing a financial transaction digitally. So that's where we also had to improvise. Instead of trying to change their behavior, we changed our behavior, and we said, here is this agent who will carry out the digital transaction on your behalf, so you don't have to change. So you just carry out doing what you do best. And the fourth is use cases. Now, you created this robust, beautiful platform. You have not imposed a change on the customer base that you're trying to address. But if you have not created enough use cases for them, then they're not going to come and use your services. So that's where the open-mindedness comes in, not only from the regulator, but also from the industry and partners that you work with. Initially, in some countries, I've noticed in the past decade, it has changed a lot now, but in the past decade, I've noticed that there is always a resistance to looking at FinTech as competition instead of looking at it as complementary. So in our case, we have about 70 to 100 financial institutions who are connected to us through an API. We have over close to 200 APIs connected on our platform, so which basically has created this large ecosystem with hundreds of use cases for the customers to use. If you're comfortable using it using a mobile app, you're most welcome. If you're not, then you can go to an agent and carry out the transaction. And today, from that 9% that we had 15 years ago, almost 70% of the population has a formal financial services account.
Great, thank you. Graham, you almost look like you want to dive into the topics.
I was kind of see around it. Yeah, on the subject of open banking, it's the regulators have done a lot. They've opened up financial services to, a huge amount of people that didn't have them. But I think one of the areas that regulators could get more involved in is the banks and incumbent financial institutions are still the gatekeepers of open banking. So often there needs to be a real sizable commercial reason for the bank to deal with the FinTech. And I'm talking from a FinTech perspective because that's what SendSpend is. We are a relatively new FinTech, and we encounter these type of practical issues all the time. And that can make it expensive. So there's, for banks to want to participate, especially in the UK and Europe, it's quite a challenge. I hear from the finance minister, Indian finance minister earlier on, that about over 90% of the transactions are done by fintechs. I think Europe and the UK have got a long way to go. A big reason is the banks, the the commercialization of open banking, and the banks still, in a lot of countries, see FinTech as competition rather than an enabling factor.
Yeah, I think that's an interesting one, right? It's nice to have a policy objective saying more innovation. Well, fine, right? Every bank will say, I can do it myself. Okay, opening up the system, great. What, from your perspective, then should a regulator potentially do differently when it then comes to open up the industry and kind of steer towards that balance where a FinTech is more an extension rather than necessarily seen as competition?
Yeah, it needs to be viewed more as an extension, but there needs to be some target set for the larger banks, some way to make sure that the banks really have an internal policy of embracing FinTech, because there's some banks that don't. I mean, I think everyone knows Revolut's a massive business in the UK, but they've struggled, you know, to penetrate with some of the innovation. So I do think that regulating and implementing open banking is good and worked well in some countries, but there are some countries where the regulator still needs to have a bit more teeth to get the incumbent banks to engage further and easier with FinTechs.
Yeah, I think that's a very valid point, right? In terms of how to work together to get that done and to get your feet into the water. I think that always brings me to the second point that we wanted to discuss, which was about cross-border regulations. I mean, indeed, well, based on this discussion, I think you can clearly see that, well, there's examples where regulations or policymaker actually did a real effort to make a difference and did it right, versus examples, well, you just touch upon what's going on in Europe, where you can say, well, perhaps still some work to do. Well, and then there is always that struggle of regulatory updates coming and policymakers throwing in more and more requirements out there in different levels, different directions. And in terms of, well, managing that in itself is a struggle. So perhaps starting with that, first from I would say the perspective of, well, all that regulatory wave of new requirements coming in and the challenges surrounding by that. And then second on this topic, I'd like to touch upon, well, from the FinTech perspective, right? So first the front part, perhaps Matt, any views on, well, my statement would be there's a lot of regulation coming up. How do you actually cope with that if you do cross-border, well, business, and if you need to be, well, you're domiciled in multiple countries, having multiple regulations, how do you find that balance in terms of complying, but still having that great user experience and delivering on your promise?
I think that's the fine line that fintechs need to walk in order to find, you know, their niche and disrupt. And I think cross-border is really, you know, one of the holy grails of fintech. Traditionally, it's been extremely slow to move money from country to country. It's been extremely lucrative for banks and traditional financial institutions because that's where some of the highest priced products are, and ideally they would keep it that way and not have innovation, because why would you if the system works, it's not broken, people are used to waiting 5 days for their money and paying 4 or 5% for FX. But the fact that fintechs do come along and they do disrupt that is critical, and I think at the end of the day, it's consumers and merchants that are paying these fees that are benefiting from this kind of disruption. Regulation is definitely key, because when you're moving money, I mean, if you ask people what's the most important thing in their life, they'll tell you family. If you ask them what's the second most important thing in their life, they'll tell you money. Most people, at least. So when you're moving things like, when you're touching that, there does have to be regulation to make sure that it's done safely, it's done in a compliant way. But with technology and the way how fast it's moving, there's definitely ways to do it faster and more efficiently and cheaper. And I think that's what a number of us are tapping into. So one of the things that we're doing at Volt is actually plugging in all of these local account-to-account payment systems. So Pix in Brazil, you only pay from one bank in Brazilian reals from one bank account to another bank account. How can we take that and now leverage that and plug that into a global ecosystem where we can instantly move money from Brazil to India? And that compliance piece is critical, and that's part of the burden. But at the same time, the opportunity that's there in terms of the amount of flows that go through between these countries and the amount of inefficiencies that can be improved make it attractive and lucrative for fintechs like us to try to optimize and improve, but also for regulators to say, hey, that's a problem that we can solve.
I think Matt is quite right. You know, the regulatory environment for cross-border is complex, but it doesn't have to be when starting out to develop a product. If you've got a fintech product and your goal is to be a global product, a lot of fintechs develop a product and push the regulation to the side and think, we'll deal with that later. But if you're developing a global product, fintech is part of your product. You can't get away from it. And the best way to look at this is twofold. The first thing is you have to develop a product that can be easily configurable to different environments, different regulatory environments. Something that, you know, in some cases it can even be dynamically configurable. You can determine from where the customer is or where something's going. You can determine what country and what regulation applies and have the product dynamically decide what regulation needs to be applied to this. So you can have configurable regulatory processes taking place. The second thing is, as much as possible, any fintech should do that themselves to wait for the ecosystem to catch up with what regulators want in multiple countries. You're going to wait forever. So, you know, for any fintech starting out with a global product, you should look at how do I make this as seamless as possible when going cross borders, and how much can we do ourselves without, you know, changing what our product actually is. And you'll actually find there's quite a lot. Regulators, countries don't like to talk to each other at the best of times. Regulation is one where they probably talk the least. But the plus side is a lot of countries actually use each other's regulation to draw up their own regulation. You'll find a lot of emerging markets coming up with regulation that's actually based on European regulation. And so there's a lot of commonalities, and getting a product to work cross borders is probably not as difficult as you imagine when you start out.
Well, I think from my own views, cross-border payments still remain a major issue for fintech. It's easier said than done, because one of the major risks you face is the settlement risk. Beyond the first settlement risk, you have the political risk, and then the exchange rate risk on its own. In Africa, we have the Pan-African payment and settlement system that was set up just to facilitate cross-border payment across the African countries. To date, we are connected from a Nigerian interbank settlement system, but transactions are still very, very low. And the main reason is, what currency do you settle in? And beyond the currency, the exchange rate risk, and each geopolitical bloc holding on to their currency, which currency is going to give way. So that remains a major problem within for cross-border payments. So it's not easier. You still have the issue of identity. You have the issue of tax and regulation from one country to the other. You have the issue of amount that is allowed. In some countries, it's as low as $20. In other countries, $500, and so on and so forth. So regulation plays a major role here. And globally, we still need to find a way to improve the cross-border payments and settlement system, especially as it relates to fintech. The banks have found a kind of way somehow to sort that out. But for fintech products, I don't expect government bodies to sit down and do this, but perhaps maybe the private sector needs to sit down, work out an acceptable process, then present it to the governmental bodies to adopt possibly. That may help. Thank you.
Yeah, I think great. I think perhaps also because when we pre-discussed our panel, I think just quickly looking at it, I think Manu, you also had an example from Cambodia, right, where you're selling 20 plus countries,
That's right, yeah. I have a different perspective to add to this about the role of the regulator and the cross-border payment in Cambodia. So cross-border payment has always been a hot topic in Cambodia, with the diaspora majorly being in Thailand, Thailand, Korea, and Japan, and a few in parts of Europe and US. But with a large population being unbanked, how are these migrant workers going to send money back home? So this has always been a challenge. So then when we wanted to start the business, there was no regulation that existed in the country for a mobile financial services company or even for fintechs. So all that existed was for commercial banks. But instead of saying no to a concept that was new to them, the regulator said, we don't understand, but so let's try. So we tested this as a pilot project by the National Bank of Cambodia and the ANZ Royal Bank. We started this as a pilot project in the country, and then I told you the story as part of the answer to the previous question. We failed and then turned it around. Today we have about 20-25 partners for cross-border SWIFT plus 20-25 FinTech partners who help us reach 195 countries across the world. Every single country can send money back into Cambodia and take money out of Cambodia. But if you do not have a bank account, of course, there are restrictions and regulations that are there in place where the amount of money that you can send is limited. But however, if you don't have an account, you still have an option to do a cash pickup. So you can get it onto your phone number from any part of the world, and then you can go to a Wing agent and then can cash it out. The limits are small, but we noticed that for the blue-collar migrant worker, about $700 to $800 is a good ticket size that they can afford to send back home or send out from Cambodia, so it works well for them. And every time the industry, and we are fortunately or unfortunately for a private sector player, our regulator is also one of the biggest disruptors in the market time and again. So every time the industry gets into this cocoon of comfort, the regulator comes and disrupts the market. So we were the first. I'm not too sure if everybody is aware of the unique history of Cambodia, because 45 years ago, Cambodia didn't have a currency. So the national bank was abolished, currency was abolished, and people were using rice as barter. So that is not centuries ago, it's just 45 years ago. And from there, you cannot get more decentralized than rice in 45 years ago. And from there to now, they leapfrogged from that scenario to a national bank at one point in time, which is the only national bank in the world with a blockchain-backed interoperable platform that enabled free transfer between financial institutions. Now, that disrupted the whole payment industry where we were monetizing transactions for a living, and suddenly the transactions became free and between different financial institutions. Then from there, now the regulator is working with the ASEAN countries to make cross-border payment using QR codes a reality. Now, there is a pilot project that's going on with a few countries, and it's going to get rolled out into a few more countries in later this year. So which essentially means that the cross-border payments, which usually every regulator in every part of the world looks at suspiciously, is now going to get opened up. And it not only the money transfer, the movement of money between countries, but also on e-commerce. So that means being a micro SME sitting in Cambodia, I'll be able to buy things from Singapore in my local currency and vice versa. Thank you.
Great. I think perhaps just to wrap up this topic, I think perhaps it's a good question for you, Graham, looking at your experience in terms of setting up two startups, now the third stint. I think I'm always seeing is that on the one hand, startup, it's all about how do you scale quickly, right? So how do you want to move fast, you want to scale quick, and then indeed you have that global product that you want to do. Right? How do you, on the one hand then, right? So we talked about challenges, but how do you then effectively do that, right? Scale quickly, be commercial successful, and at the same time adhere to that, to the regulatory requirements out there.
Yeah, well, as I mentioned a little bit earlier, the key things from any startup scaling quickly is being able to have control over your own technology. So what we decided, especially from a regulatory perspective, is bring it as much of it in-house as possible, stay ahead of the curve. The regulators are generally a little bit behind the curve, and the specialist regulatory providers will be a little bit behind the regulators. So, I spoke a bit earlier about a configurable, almost dynamic compliance and regulatory module. That is a must if you want to scale across borders very quickly. You have to be able to deploy a product and have that, complying with legal requirements almost instantly. Regulatory sandboxes are also a very good option. I know in the GCC states there's quite a few regulatory sandboxes at the moment. So this is one way of getting your product to market without having to go out and raise significant amounts of capital. So any startup, one of the biggest hurdles is raising capital, as well as developing a product that complies. And so looking at things like regulatory sandboxes to get your product to market quickly is one of the is a good way to do it. So make use of that in the countries that have them. Not all countries have the regulatory sandboxes at the moment, but where they do, it's a good option to make use of them.
Great. I think that's a nice segue in terms of innovation-centric regulation. And I think it's one of the interesting topics. I think my observation typically is looking at a regulation, at least in Europe, it typically is a response to a crisis that happened or occurred, right? So something went wrong, trying to fix that, we come with regulation. Or innovation comes out, right? Then we first say, well, no, or it's not within our remit. We started with crypto. The initial stance of a lot of regulators were, well, it's not money, it's no nothing, so, well, that's fine. Then seeing that moving on, right, by saying, well, is it an investment? Is it a currency? What is it? Well, let's assume they get the regulation right. Then the other part still is, how do you then be more innovation-centric, right? Or what is actually required for the financial service industry to move on by saying, okay, we're embracing new technology, and, well, on that basis, starting to pioneer and create a regulation rather than waiting for a regulator to do something. I think, Matt, do you have any views on that, on how that could be done differently, or what should happen in your view?
I think it's always going to be one of those games where innovation is going to be pushing regulation, right? I mean, you have regulation that comes into place. At first it might change something, then it becomes status quo. But you're always going to have, maybe not always, but in most cases you will have FinTechs, startups, people who look at a problem and say, hey, maybe there's a different way of solving this, better, faster, who will start pushing the envelope. And sometimes it'll be leveraging existing regulations, sometimes they'll be pushing in a way that the current regulation hasn't foreseen, which then requires further innovation on the regulation itself, right? I do believe that things like financial services do need to be regulated because, again, we're talking about people's money, we're talking about anti-money laundering, we're talking about making sure that things work in a compliant way and people don't lose their savings or their transaction. But at the same time, there are still many inefficiencies in the system. And again, going back to account-to-account payments, which is what we do. I mean, this is improving how fast money can move, how cheaply money can move, how safely money can move as well, because you are now not handing over a credit card to somebody that can take down the numbers. You're actually using bank-grade security to authenticate a transaction and move that money. Now the question is, how does that get pushed further? Well, then you start going into innovations around central bank digital currencies, crypto, things like that, which are, again, pushing the envelope, which are essentially moving money account to account, but are not yet regulated. And that innovation is, again, driving regulation.
Premier?
Okay. For me, I think since the creation of humanity, what has sustained humanity has been innovation. And if you go back to the Bible, after the creation of man, if you follow the Bible, the Adam and Eve coexisted for a long time. It was until the era of Moses that the rules, the 10 Commandments were created. which means that a lot of innovation took place before even Moses had the 10 commandments that we now live by. So I think there will be more and more innovation. But what I would, innovation, especially around the FinTech environment, but if you live within a particular ecosystem, you are going to see a lot of things that require a lot of innovation. If you come into Africa, for instance, there's a lot and a whole lot of innovation required to address a lot of the payment issues within Africa and beyond. So if you need to wait for the regulators to guide you, then you are going to wait forever. So my suggestion would be, yes, go ahead, innovate, but while innovating, engage the regulators simultaneously. Because in that process, they understand what you are trying to do, you address their fears, and then you mitigate whatever concern they may have, and you can have your product fully launched. They will permit you in that regard, but if you try to ignore them and continue, one day you're just going to get a secular, and that secular could kill your business completely. A lot of startups have faced that kind of problem, and it has stifled a whole lot of innovation. So I believe strongly that companies must continue to innovate, but in the same vein, engage other stakeholders in the process, ensure you understand the customer needs, because you also have to engage the customers as well, who are the ultimate beneficiary of your innovative product. I think with that put together, one could have a proper regulation coming side by side with innovation, but I don't see the situation where regulators will think ahead, bring out policies up front. It's kind of difficult. Thank you.
Yeah, I think I like that, right? So it's not, don't wait for regulation to come out, innovative, just take that step forward and take the regulator along. I think that kind of makes sense. I think Manu, I think for you, because I think you shared with me an example of saying, well, look, actually, the National Bank of Cambodia, in many cases, has been the disruptor of conventional belief, right? So they push a lot of innovational solutions into the market. Any views on that, as in terms of what can we learn from that, or how do they do that?
Innovation, things are going to change. Right? Thank you for that nice introduction you gave of me. When you say I have 25 years of experience, am I doing what I learned for 25 years back today? Absolutely not, completely irrelevant experience. Everything is changing. So the way we used to regulate things, or the way needs were being met 25 years ago, is not the way things are going to, needs are being met today and needs are going to be met tomorrow. So there has to be a progressive, exploratory, innovative mindset in regulating innovative ideas. We've been lucky in Cambodia. The National Bank themselves have been very forward-looking, and you have to be, and if 45 years ago, if you're using rice as barter, then you have to be progressive in your outlook and thinking. So one good thing that we have noticed there is that if there is a new idea that comes out in the market, instead of saying no to an alien concept, they say, let's do it as a pilot, or let's do it as a sandbox under our guidance and under our watchful eyes. So this has been the case. They're quite cautious when it comes to concepts like cryptocurrency, etc. It's still not allowed. But the Securities Exchange Regulatory of Cambodia has been open to digital assets. They said, okay, here is the sandbox that we have created. Anybody interested or anybody has an innovative thought idea, please come and test it under our watchful eyes here as part of the sandbox. So that has been one way of trying out ideas that have not been conservative, that disrupting the convention, and then test it out for its merit, and then let the ideas prove itself. Thank you.
Great. I think I was quickly looking at the time. It's showing me it's beeping. So I think that means we're kind of through our session, but perhaps want to go away with, well, okay, we're in the Global FinTech Fest. This is with all the experience that you guys are having. What would be your advice, or the one thing to do if you're now sitting here and saying, well, I'm that FinTech who wants to scale and wants to do it, how do I navigate? What would be that practical point of view that you want to give away to the audience? Perhaps starting here with you, Graham, and then move way up.
Well, firstly, just thank you everyone for listening to us. It's been great to have you as an audience. I feel privileged to be here, and thanks to the MPCI for putting on such a great show. It's going to be an excellent 2 more days. what should you do if you're trying to scale a fintech? Well, first of all is, completely agree what Manu said earlier and what Prince said earlier, engage with the regulator. Engage all the way. Start off with talking to the regulator. When we started up our product, the first thing we did was, you've got to build a product that complies with regulation, otherwise it's not going to go anywhere. It's as important as providing a product that delivers a service to a customer. You have to also deliver a service to the regulator. There's another party that sits on the side from any fintech party, and that is the banks, because no fintech has a banking license, otherwise they would be a bank. And it's generally the banks, from my experience, that tend to have much sharper and bigger teeth than the regulator. So the banks it's their license at stake. They're the ones that generally get fined if something goes wrong. All fintechs will need a banking partner at some point. So engage, make sure your product complies with regulation. Make sure you have sufficient control over the development of your regulatory modules, because if it is a global product and you're going global, you need to be able to react quickly, and you can only really do that yourself. And thirdly is work with the banks. Your bank partners are extremely important. They will guide you, let you know where you're going wrong. It's at the end of the day, it's generally their license at risk, or they're going to get fined. And at the end of the day, they have to make a profit out of what you're doing. So, these are the three key things to look out for.
Thank you. I think that sounds like a comprehensive summary. Any additions from the rest of the group? Or?
Okay, I would add that to my advice would be, in addition to what I've said earlier, just three. One, people. You have to have the right team, who have the brain, not just human bodies, the right set of people within the organization that understand the vision. Then two, the technology platform. You have to have a technology that will deliver exactly what you want, and you must understand the technology. With the right brain, you can program the technology to deliver what you want. And finally, you must position yourself as a collaborator, not a competitor, to succeed. Thank you.
Great. Matt?
I think my one piece of advice would be partnership. I mean, the beauty of fintech is the fact that a lot of the systems are interoperable, and a lot of the pieces of the value chain can be sourced instead of built. And that drives innovation and that drives speed, because all of a sudden if you add 2 or 3 things together, you get a fourth, which is a new product, which is innovative, and you don't need to be all things to all regulators. You can actually leverage the fact that different partners already are compliant, and you, by partnering with the right companies, you're able to build new things or accelerate speed to market to be able to test and then adjust if you need to. And that's one of the ways that we're looking to grow our platform and our global reach, is actually partnering, both in terms of local connectivity as well as finding companies and fintechs that we can support with the connectivity that we have. Because, simple example, a company that's doing remittances, they want to be able to get money into the recipient's hands. They don't necessarily want to know how to plug in every single bank in Europe. We've already got that sorted. So those are the kind of partnerships that you can leverage. You'll find a different company that can do KYC, etc.
Thank you so much. I think with that, we'll come to the end of this panel. Thank you very much for providing your views. And I hope it was of interest to the audience. Thank you so much.